Good afternoon, everybody. Welcome to your Thursday edition of the TraderMerlin Show, a day with a little bit of a pullback in our ever-exciting crypto markets and our equity markets we'll talk about today. But I wanted to switch things up a little bit. As you guys know, I used to do guests every single day on the show, but now it's just hard to get guests because there's, it's just hard to, I'm not one that likes to go bug people to be on the program. However, by request, I've had several of you ask me about bringing Jerry back on the program. I thought, all right, why not? And I said, you know what should we talk about today? And of course, I've had questions about my day trading background and past. And I thought, well, let's let Jerry discuss this one. And here's what we're going to talk about today. We're going to talk about the top 5 things to know when day trading futures. Now, of course, these are things that could be applicable to what I would say is any asset class, really. But it's specific rules to Jerry, and I might salt in a couple of mine along the way. Without further ado, from Pacific Shores Trading, we've got Jerry Baldwin joining us. Jerry, how you doing, my friend?
Merlin, I'm fantastic. It is wonderful to be here as always with you. Thank you for having me. And yeah, things are great. Always a great day when you and I get to spend time together. And thank you for the kind words. I had students this morning actually asking when I was going to be coming on with you, and they love you and I together. It's a great chemistry and always a great time. So thank you for having me.
It's always a good one. And you know what? It's interesting that you're on today because Chicago is known as the Windy City. And today we have like wind warnings down here. So you brought the wind with me. If you host a show in Chicago and you need sun, you just let me know and I'll bring the sunshine to Chicago. But you brought the wind today, man. It's great.
Like I said, it's a great match. We got sun and wind. We got everything. It's all good.
Perfecto. Let's dive right into our topic, therefore we can get everything out of the way and open up to questions if you people have them along the way. The topic du jour, as we brought up, is going to be kind of the top 5 things to know when day trading futures. So you've been doing this for quite some time, and of course you like to focus on that shorter term aspect of things. Start us off with kind of what are your kind of key highlights here for you, and we can kind of run through a list. I'll keep a running list as we go of your top 5.
Yeah, I love it, Merlin, and I'm again excited to be a part of always the show with you, but I really like today's topic. And as I was putting that list together, it's an incredible, it's of incredible importance because there's so many guidelines that you have to follow when you're day trading. And so it was great for me just to sit there and actually think about, prioritizing 5 things that I spend time on. And I'll be anxious to hear yours as well. But I'm going to grab the list, but the first one was identifying risk and managing risk. That to me, and that became really evident in the, you want me to do all 5, Merlin, or just one at a time with you?
Let's do one at a time. I think that way we can kind of open up the discussion, and if anybody's watching today, if you want to interact with us and let us know kind of your thoughts on it. And let me ask you this to start, are these in kind of your priority, like number 1 most important thing is identifying your risk?
I would say so. I didn't necessarily put them in order of priority. I think all 5 are essential. But I think, I would say managing risk is probably the most important one. That came to mind as I was doing this driving, thinking of what we were going to, thinking of our subject matter. But to me, it is, and it became really evident to me doing, multiple trading combines with these proprietary trading firms, and just, being able to identify and manage that risk, because that's the first thing they look for. They give you a daily loss limit, and if you exceed that, you get thrown out. It used to be where you had to pay to come back in. But for me, it is because you can be wrong 4 out of 5 times, and if you're managing risk, at whatever number that is for you, for example, $50, $100, you can be wrong 4 out of 5 times and still be in the game, which to me is the most important thing, and it became the most important thing as I started to go through these accounts and go through these combines and see, okay, how am I passing? How am I not passing? So for me, it was, identifying exactly what risk I have on any one given trade, which accumulates to size essentially. How much size can I put on? How much risk can I put on? So yes, to me, that would be probably number 1, Merlin, 1 of 5.
So let me take that one step further. Obviously, I concur. I think that the most important thing, the way to make money in trading is to focus on your risk management aspects of it. And that to me is number 1. But, within that, there's a lot of different subsets we could put in there. So I just typed it out here as we're doing this one. It says minimize and identify. I should put identify, not identified risk, or minimize and identified risk. On that topic, let's take a step back and talk about what are some of those risks to you. Because I know that, in the futures world, which is kind of what we're revolving the show around today, we could look at something like trading the Dow futures, which probably one of the smoothest, I would not going to say anything here is the safest, but that's probably the least risky because of just its point value per tick. And then you get into something like, I don't know, lean hogs, live cattle that have liquidity risk and they have volatility risks. And are those factors that get summarized into your number one bullet point of identifying your risk? So are you trading lean hogs because or not trading lean hogs because it's so risky? And is that why you focus on those indexes?
Yes. Yes. Okay.
There's a lot of stuff in there. I know. Sorry.
Yeah. No. You're the best, man. Hey, this is awesome. So, that's actually one of my 5 is trading products that carry enough volume to make sure that your spread is within a tick or two. So that's super important. And then ATR, how much movement is provided there. Merlin, read that off one more time because I'm trying to. I had something. I want to grab it again for you.
Well, I think my question was in that subset of identifying a risk and reducing that risk or trying to get rid of that risk. And I don't think we can get rid of risk 100%. That the only way to do that is just to not trade. So when we look at the spectrum of futures products, how is that part of it as well? Because some futures products are unbelievably risky, yet the novices will just go all in and go, oh, yeah, I'm just going to start off with the Russell, right? Which has gotten a little bit better since they switched the contract symbol, but it used to be the most volatile one out there. So
yes,
for someone starting off as a risk manager, don't start there. Start off with something that barely moves so you get your feet wet.
Yeah. So Merlin, so for me, it absolutely, that absolutely does matter. And what has revolutionized, in my opinion, the futures market are the addition of the micros, because like you're giving the point values on the minis, which are entirely correct. And that's, we have to know those, but now being able to do micros, because in some cases, like you said, 10 points of risk on the NASDAQ future mini is $200. And maybe that's too high for someone just starting out with a smaller account or just starting out with not a lot of experience. Now we have that ability to minimize that with a micro down to $20 per contract. Now maybe we can trade 2 or 3 contracts, still only be risking $60 and give ourselves flexibility with regard to locking something in at maybe, for example, maybe a 1-to-1, and then letting that thing go to a bigger target. Or if you lose at that point, you're still at least either breaking even or allowing yourself lunch money. So I think the products that we trade absolutely matter because and again, with the innovation now of the micros, pretty much on everything. They are on everything I trade. Because I only trade the 4 equities and then I include CL and the micro CL and then gold and the micro gold. So yes, because to me it's about risk. Like for example, in one of the combines that I did, the most you could lose in one of them was $500 a day. So
okay.
You have to, if you want to do 1 or 2 trades, you got to make sure you're keeping that, $250 a trade, whatever it is. So in some cases, without the innovation of the micros, it was impossible because some of the candle size, even on a 5-minute chart, might be so big that if you're using, top and bottom of a candle, it might have taken you out of your risk. Whereas now we can be more creative, do a few micros, and those things add up. Those things add up too. Those micros add up, both, for you and not for you if you're on the wrong side of them. So yeah, absolutely, Merlin. It very, very much comes down to what products you're trading, and then of course, as we alluded to earlier, the volume on those products to make sure that the spread is good and you're not getting wiped out by one big order.
Yeah, it's funny when I was on the CME. I luckily was. Let me clarify. I was a guest on the CME, never a trader on the floor. Make that very clear. But when I was there, I actually had a chance to walk by the live cattle pit, and there were like 4 dudes in this big pit just leaning on the railings doing nothing. They looked as bored as you could possibly be. And I kind of came back from that and studied up on these a little bit and went, there's a reason I'm not trading lean hogs. And I see, I saw the comment come through here just a second ago from Big Eb says, I've never known anyone that actually traded lean hogs. I've actually known a couple, but typically when you get to that kind of element, you're a specialist and you are really in the know of all of the agricultural data that goes along with those components. For me, I don't trade it either. I'm not trading live cattle. I'm not trading lean hogs. I don't trade the real rare exotic stuff because, as Jerry just mentioned, the risk involved with those is so elevated, particularly from these lock limits. If anybody here has ever been stuck in a lock limit down or up going against you, that's probably the most terrifying thing you can have happen because it's just this perpetual uncertainty of what's going to happen with price. So, that's a risk management tool for me anyway, where when I'm trading futures, I'm kind of like Jerry. You have like a main 7 that you stick with, right? And hello, Don. Good to see you.
Yes, absolutely. Absolutely. Merlin. Yeah, it's actually 6. I keep it at 6. I mean, there's a couple you can expand out a little bit, but the 4 equity products I really like. I do prioritize the Nasdaq and the S&P because of the volume attached to them.
Yeah.
But the 4 equity products and the micros, and then I've done more with gold in the actually, matter of fact, last week. As a matter of fact,
great breakout.
Oh my gosh. And then CL. I will do some things on CL as well. So those are the 6 that I stay with. That again, they carry good volume. You can limit risk on them, identify risk. I think the other thing too that you bring up is a good point about lean hogs and some of the other exotics where the volume might be a little bit less. Is what type of trading are you doing with them? Like lean hogs may be almost like a seasonal or like a week to 2 to 3 week trade if there's something going on in that market, as opposed to like you and I, for the most part, we're getting in and out of trades same day. In other words, day trading. Right. So yeah, the product very much speaks to the style of trading that you're doing. And for day trading, yeah, for sure, I would prioritize the 6 products that I have. And obviously stay away from something like lean hogs for all the reasons that you outlined.
And I think those are the 6 I would say. Actually, I go 5 because I don't trade the Dow. I don't know why. I think I just boycotted the Dow because everybody thinks it's the greatest thing in the world. So I just don't trade the Dow at all. But S&P, NASDAQ, Russell, crude oil, gold, love them all. One thing for people who might be new to futures, that's a great comment here by Pepe. He says, I also traded the ruble, and due to the spread and slippage, got stopped out before I even realized what happened. On a lot of these illiquid markets, those spreads, the difference between what you buy it at and what you sell it at, get really wide, particularly on thinly traded things like live cattle, lean hogs, the ruble. But then you also have the time of day becomes a factor. And you're right, if you put a stop loss in the system, you might buy it and then instantly be stopped out because the spread is wider than your stop loss. So something to keep in mind, which I think you're probably going to talk about here as one of your second or third points in your list.
It is. So, you know what, Merlin, here, talk to the group for 10 seconds. I'm going to grab my phone. It'll take me 5 seconds.
You got it. I can always do that. Don here says, Grandpa Dow. Yeah, it is that way. And, Tilly Allison, who I think, Don, you might know Tilly. She was an OTA teacher for a long time. Now, I think she's getting her financial advisor and financial planning certification. I actually think she's actually doing that right now. She was a Dow queen. And what's funny is, Tilly is one of the most disciplined women I've ever met in my life. She's so focused on rules and structure and just doesn't deviate from it, which actually makes her a pretty good trader. She started off just with the Dow. And I was like, I got annoyed talking to her about it because she's like, what do you think of the Dow? I'm like, stop. I don't care about the Dow. She's like, but it's getting me started. And so she started to get better and better and better with that Dow. And next thing you know, she felt more comfortable. She jumped up to the S&P, started trading the NASDAQ and the Russell, and now Tilly trades pretty much anything that can be on a financial market. But as a starter tool, yeah, Grandpa Dow was a great way to get her started, and I think a lot of people start off that way. All right, you're back, Jerry?
I knew before I left, Merlin, if I was going to leave it in anyone's hands to talk for the next couple of minutes, you are the man for the job. So
yeah.
Thank you for taking care of that.
It's funny. I've had some guests over the years where people were like, God, your guest just wouldn't shut up. And then I think about it sometimes. I'm like, I don't shut up. I just keep, you could throw it at me and I'll just keep going. You could have dropped out and I would have just done a show ad lib right there from it. So no, it's all fun.
Gift, man. That's a gift to be able to do that. So it's all good. So I'm looking at the list here. Yeah, it's so number 2 was also really important to me. And this is something, again, that took me some time, and it sounds simple, but it's not. It's trading in the direction of the trend. And to me, it's so important because, again, when you have that trend on your side, things just seem to work out. It's the craziest thing in the world. Now, the challenge obviously is, okay, how are you identifying trend? And I've seen, people all over the world, some people make it so complex that it's crazy. You can't even understand what they're looking at. Other people can make it simpler. So depending on what you're using to actually identify the trend, and for myself, I do like a moving average crossover. I love the parabolic SAR. Mm-hmm. These are things, previous levels of, for example, previous days, open and close, high and low. Those are levels to me that really matter. So I have a set of rules and guidelines that I share with my students in the room, and I put into my course content where, I want to be long above specific levels. I want to be short below specific levels. Like, for example, the open of the day to me is important.
Yeah.
If I would like to be, as simple as it sounds, I want to be long above the open of the day, and I want to be short below the open of the day. Those are just a couple of the guidelines that I play with. So, but just those simplistic identifications of trend, it's amazing how things can really work in your favor when you start to pay attention to them.
So I got second bullet point add in here, trade with the trend. And I think this is a little different when we look at in context of being a day trader. So for example, you guys have heard me say it's probably the most important thing from a pure trading perspective. Again, risk management being the umbrella that covers it all. But if you're going counter trend, the odds are right against you. And I love snowboarding. I'm going to be going snowboarding here in a next weekend. Do you think I'm going to try to go snowboarding uphill or go downhill? And to me, that's the trend. The trend of the mountain is down. Like, why would I even try to go up the hill unless I'm on the chairlift, which makes it easy? Otherwise, you have to go with that trend. You have to ride things down in the direction or up or down, whichever way that mountain is going. And I'm surprised at how many people go against this. Now, a couple of trades I've put on for you guys recently are certainly going counter trend trade. And again, I told you that was risky. It also went in my gamble portfolio. I did add more to the Go EV position today. I added another 800, so I'm in for 2,300 shares on that one at this point. But the trend is probably the most important piece. Your probability increases exponentially just by going in the direction that prices are going. And one example I'll bring up here is Abercrombie and Fitch. Now, Abercrombie & Fitch obviously had a nice little pullback, but, if you've been shorting Abercrombie at any point over the past 3, 4, 5, 6 months, what's wrong with you? You're like, oh, well, it's got to come down. No, it doesn't. Until it starts making new lows, it doesn't have to do anything. It's going to keep going up. You look at Go EV, which I did buy. The odds are this thing is going to continue to the downside, although it's at $1.30, so how much lower can it go? And do another reverse split here in a couple of days. But, go with the trend. Trend is your friend, or the bend at the end is probably the only tattoo I would ever get. Sorry, I went long-winded again. It's all you, Jerry.
No, I love it. No, I think you summed it up perfectly. Like I said, to me, it's, I used to do like gap fills and things like that. And again, there's nothing wrong with that if you have a specific set that you're looking at or specific strategy that you're looking at. But I've just found so many better probabilities when I'm actually, looking at, being long above specific levels or short below specific levels. And then obviously identifying, and like I said, one of the rules that I follow pretty much 100% of the time is the parabolic SAR. There's a number of functions for that particular indicator, but one of them is trend recognition. And so I can almost say never, but I almost never go long without the parabolic SAR being underneath me. In other words, showing me that it's in a bullish trend on whatever time frame I'm trading, ideally multiple time frames. And I'm never short without the parabolic SAR being above me, and in other words, representing that current trend on that particular time frame at that time is bearish. So, just following some of those basic guidelines, when you find, whether it be an indicator or whatever it is that you're using, once you find something like that has shown you time and time again can be positive and can be positive and confirming, that's what to stay with. So yeah, big fan of trend. And again, just following some of those simple guidelines has really increased probabilities with regards to my own futures trading.
For those out there that are going, oh, indicators and parabolic SAR, which stands for parabolic, it's not support and resistance, it's parabolic stop and reverse, I believe is what the SAR stands for on that one.
Yeah, right. Yeah,
with that, those are just, in my mind, accessories to you. It's like accessories. So if you buy a car and you want to get, fancy windshield wipers so you can get the double blades and clean your windshield twice as fast, that's an indicator. You're buying an accessory. So for me, parabolic SCR, moving average, stochastics, ADX, DMI, all that stuff is an addition. Now, you can correct me if I'm wrong here, but when you're day trading short term on the futures markets, you're watching price. It's all about price action. And you're saying, okay, I feel like I want to go either long or short. Pick anything. I'll just say the S&P. I want to go long the S&P right now. At that moment in time, your mind has already said, okay, here's the factors that have supported me going long in the S&P. Then you're going to go look at that parabolic SCR and say, are we above that right now? If we are, that's just a pat on the back for that trade setup. Is that correct? Or do you start with parabolic?
Merlin, that's a great question. So for me, if I'm looking, obviously, like being above the open, you do have to look. I mean, yeah, you do start with price because you want to see where price is located on the chart with respect to previous levels. For example, are we, trading above the previous day's close and high? In other words, are we trending upward or are we trending downward, depending on where current price is with respect to specific levels on a chart? So I think it does start there. And then, like you said, now if I can combine, um, popular indicators that people are using, and I can get confluence with those. That's what, like you said, it adds confirmation to me that, okay, now I'm going to take a long position because obviously there's other participants long in the market because they're using X, Y, and Z indicator, and all these indicators are pointing in one direction. So I've got three groups right now looking to identify going long. So I'm going to be a part of that. So that's kind of my mindset on it. It starts with price, and then it goes to a confluence of indicators which people are using. So in other words, I'm joining in with people who are already going in that direction for a specific reason, not because of a hunch or not because they think something should happen, but because they're using specific things to actually tell them where to go.
Right. And I like your early on talking about the opening price. I think people discount or don't put as much weight on those values, such as the open, the high, low, and close. You have an OHLC chart, which you can get drawn out. Candlesticks, obviously, bar charts. But, that opening price, for anybody who's kind of questioning what it is, think of it like this. That's the beginning of the horse race. That's when the gates open and everybody just charges out the gates. That's the open. And then the close is equally as important, maybe more important, because that is what everybody drove to that end goal, and that's where price ended up at. Those have value, right? There is a significance to the open and the closing values each day. And, you'll see quite often price will retrace to those opening or closing values over the next day or two. It's an implied supply and demand zone that's built into the chart. So something to keep in mind.
I love the way, and that's what I was going to add on to what you said, but you said it perfectly, because so many of our students, or so many of the viewers, I should say, are products of education that talks about supply and demand, and that's exactly what those are. Those are supply and demand levels. When you look at a close price, that is oftentimes the origin of a gap, whether it be an inside gap or outside gap, but that is the origin or the supply or demand zone for a specific level. So absolutely, those in and of themselves are supply and demand levels. So they have to be respected, and they're respected on price charts all day long. You see it all the time when price goes to them. Like you said, magnetically goes to them.
Yep, that's a attraction to price. All right, so we have number one was minimizing an identified risk, which we talked about. Number two on that list was going to be trade with the trends. What do you have for number three?
One of my favorites here is technically, I had three technically being trade products with volume, but we've already covered that.
No, you can't ignore that. That's got to be something in there, doesn't it? Come on, liquidity, man.
Oh, absolutely, it does. I just thought we talked about it, but we could go deeper into it. Absolutely, yeah.
Well, I mean, you could have more than 5 rules. That's for damn sure.
Oh, easily, right? Yeah, this is easy. The
Yeah.
first 5, yeah. It's just like you said, and like I said, I think it's just a matter of prioritizing what those 5 are, because absolutely you can have more than 5. So, but yeah, number 3, I did put trading products with volume because, like you said, it affects your spread, it affects your risk. It affects the overall movement. It affects your average trading range, how much that product actually moves in a given day. So yeah, that maybe we take it for granted because I only do specify on the 6, but there's the reason I do only specify 6 is because I know all 6 of those products carry adequate volume with them. And so during the course of a trading day, I'm looking at a tick, maybe 2 spread, as opposed to like you were talking about lean hogs or live cattle where, you might get into a position and get stopped out immediately because the spread is so wide.
Right. Yeah. And again, this takes some time to research those ones. The challenge that many of you have, especially those of you starting out, is you're going to follow people, and everybody's going to have different things that they're going to talk about and different things they're going to try to promote and push. And I always talk about the things I'm in and the things that interest me, but that doesn't mean that those are the right products for you to be investing in. Always do your research on whatever it is. I remember years ago, someone was really pushing a specific stock, and I was like, okay, great, let me look at it. And the stock traded like 100,000 shares a day, which for me is so far below my volume threshold. I don't care what the company did, I'm not going to buy into that. Now, for others of you, it might be different, right? That might be okay for you. I just know from my experience, especially since the topic today is 5 things for a day trader, that 100,000 shares for a stock is nowhere near acceptable for a liquidity perspective in the equity markets.
Yeah, absolutely, Merlin. And like you said, some of our students might just be starting. So, I speak about it like it's something that people know already, which many do, but there are many who don't. So yes, volume is a huge subject and a real important criteria in whatever you're trading. Like you said, I mean, I think the numbers that we're always taught when you and I were being trained was 1 million shares a day minimum on stocks, and
Yep.
then obviously with futures it would be more than that. I mean, not more than that, but you could do less than that in futures, but
Right.
still you want to have a good couple hundred, few 100,000 contracts traded per day on a futures product. And so yeah, no, it is absolutely important, and certainly so it's number 3 on my list.
All right. Number 3 on the list was trade only with liquid product. What's number 4?
This is one of my favorites, just because this was challenging to me. Maybe there's other people out there who feel the same way, but allowing profits to maximize, and then obviously people use the term letting profits run, which however you want to word it, but allowing profits to maximize. Again, maybe easier said than done, because how are you going to allow them to maximize? And so again, I use an indicator, specifically the parabolic SAR, that allows me to do exactly that. So, I may have achieved a 1-to-1 of my risk, or a 2-to-1 of my risk, maybe even a 3-to-1 of my risk. But there's cases where it will go even beyond that. Or maybe I'm looking at an ATR level where price normally would stop. That price had ATR is like a rubber band. You can stretch the product a certain amount, and maybe price went to the ATR and you would think it's going to stop. And then 8 years ago, I might have just sold it there and forgot about it. Whereas now I'm using another indicator to allow me. So what if price goes further? As we know, and as we talk about, the stock market it's about greed and emotion. So there's a lot of emotion. If people want to continue to buy, they're going to continue to buy. If they want to continue to sell below a certain level, they're going to continue to sell. So why not be a part of that? So I found something that works, again, very, very well for me, that allows me to maximize those profits now. And sometimes it's hard to do, because again, you've locked in 1-to-1, you've locked in 2-to-1, you see all that money sitting there, and it's like, wow, I could just sell this and go, or I can start to trail it and bracket my order and maybe get more out of it. And sometimes you do, sometimes you don't, but it's worth doing. And like I said, that was the toughest thing for me. But so allowing profits to maximize, that to me was, again, that the trading combine helped me a ton, because I had to make X, I had to achieve a profit goal. I had to make X amount of dollars to be able to go to the next level. And I wasn't going to do that, or it's going to take me a lot longer, at $100, $200, $300 a pop. If I had an opportunity to have an $1,100 day, based off a nice opening range move or something like that, I'm going to do it. And I did do it. And that's, so anyway, that for me is number 4, but really something important, Merlin, and maybe something takes a little bit of practice. I'm still working with my students. I do my trading room every day, 10 o'clock in the morning, and I've got a great group of members who come in there. And there's a couple specifically that, they're working on being able to hold those positions a little bit longer and using an indicator to maximize them. And they're getting good, and it's paying off. But so that's number 4 for me, super important. What do you think?
Yeah, I think the challenge here, especially for the futures traders, it's actually something it's changed a lot over the years. You guys who are starting out now, you have it great, because when I got started, there was no micros. So you had to buy, the mini was as small as you could get. And for someone who's starting out with just a couple $1,000s in the markets, you might not even be able to buy 2 contracts. So it makes it challenging for someone starting out. But now with the micros, I would actually encourage someone to start with, like, let's say, I know it's going to cost more in commissions, but if you're learning, I'd rather you start with like 4 micros versus trying to buy 1 S&P. And why E-mini? And why? Because if you set your objective, and let's say you've got your trade mapped out, you've got your reward to risk ratio, you got your stop loss, you got your price target, that's what, 3-4 to 1, and you hit your target, the novice is going to get all excited and go, "Ah, woo!" and cut that trade off, and the trade's over. The reality is, and this has happened to every single person in this room that has been trading for any amount of time, is you get out of something and you look at it an hour or a day or 2 days later and it's up 20, 30, 40, 50% from where you got out, and you're like, son of a biscuit, drive me nuts. So at least if you have, let's say, 4 micros, okay, fine, sell 2 at your target, right? So now you have a little bit more to work with. And then maybe you set a trailing stop or go to a next target up and sell 1 more. And you start to learn about that scaling out of a position, letting winners run. And I think, especially if I look back over my 27 years of doing this, I've left, without exaggeration, hundreds of thousands of dollars on the table because I closed out my trades and said, oh, I hit my target, I'm out. And you look back and you're like, oh, you gotta be kidding me. I mean, heck, I could say I left hundreds of thousands of dollars on the table just with my NASDAQ trade from this year back in October. Right? I got out because of a specific set of rules, and it's like I'm kicking myself for that one, but you can't. So I think anybody who's learning, the micro products are great for you because you can get multiples. If you just have one S&P or one NASDAQ, you can't scale out of it. So now that's part I think that you should modify a little bit. But yes, you have to let things run. You'll never get that gigantic 100-to-1 winner in the futures or stock market or anything if you don't let it run.
That was beautiful, Merlin, and that was a perfect segue into number 5. It's like you knew it was coming. So number 5 for me is use 2 or more targets. And
Okay.
again, that to me is, yeah, it's just so valuable. If you can minimum 2, and again, like you said, and like I said earlier in the show, that's where the invention of the micros has become so valuable, because now we can do that. I mean, this morning was a case where, I probably couldn't have done one mini based off the candle I was using because of the risk, that was attached to it. But I was able to do a couple of micros, and now all of a sudden I have more flexibility. I can lock something in at a specific price point, again, maybe a 1-to-1 or something like that, and then allow that other one, like we just talked about in rule number 4, to go as far as, we want it to go based on whatever exit criteria we're using. For me, again, it would be the parabolic SAR on that particular time frame. So yeah, again, I think it's a great point, Merlin, and I know you kind of summed it up right there, but I feel the same way. When I learned how to use multiple targets and then understood the flexibility that it gave you to be able to do that, anyone who's ever traded and had a big winner, going, and you see in the upper, the upper left on TradeStation, you got, X amount of dollars and it's green and it's all going great. And how fast that can change. And the temptation obviously is when it's up there is you want to sell it. So how nice is it? And I tell my students this all the time. How cool is it when, you get into something and, it goes to the 1-to-1 and you lock something in, for example, maybe you do an odd number, which is really cool. Something I teach in my courses. You do 3 contracts and you sell 2 at that first target. Now, all of a sudden, you've mathematically made more than anything you could lose because you've sold 2 and you still have 1 going, and you let that other one go and go. Now, all of a sudden, you see that profit up there, and it doesn't phase you because you've already locked in what you're locking in, and it gives you a real peace of mind and a real confidence to be able to hold in to some of those positions.
Sure.
To get those bigger gains that you're talking about.
I think to add to that, for anyone who's kind of making notes here, be careful, because what Jerry said is very true. However, there's one Achilles to that, and that he said let's start with 3. So I'll sell out 2 at my my target. I've got my 3-to-1 locked in, and I'm happy, right? And that next one is just it's free money. There's no way I can lose unless barring some colossal gap down. If you're trading markets like that, you probably taking the right things, you won't get those big gap downs. But let's say that thing keeps on going and going and going and going. What psychologically your brain's going to go, damn it, I shouldn't have sold those 2. Next time, I'm not going to sell when we get to those levels. And that's where you have to adhere to your trade plan and your rules. And if your rules say sell 2 at the target always, then never break that, right? Don't shoulda, coulda, woulda, as Pepe puts in here. It will do you no good, right? You got to get to the point, you hit your target, you make those profit, and then you say, I'll let that third one go, and whatever happens to it, great. But I'm not going to look back at the 2 I got out of, or 3, or whatever you got out of already, and second guess that and say, next time I'll hold on to it longer. That's a big thing.
Absolutely. And it all goes back to the original rule number 1 about risk management and identifying the dollar amount risk that you're actually putting out there. So, because again, you don't want to put more out there than you're supposed to, or that you're allowing in your trade plan. So yeah, that following that plan, Merlin, is key, and some really, really good parts to the whole day trading thing that we talked about.
We could spend so much time going into the day trading side of things. One piece that we talked about initially, which was the managing risk part, is make sure you guys are trading the right instruments for you. One little piece that I'll give you from my experience, and Jerry says he's got kind of 6 markets he focuses on. That's going to give him a huge advantage over most people, because you whittle down this universe of thousands and thousands of different equities, hundreds of different futures products. There's so much to look at. Forget it, right? Don't focus on everything. And it's easy to do when you have one trader buddy who's trading something, who's making tons of money, or Jim Cramer saying, hey, buy this stock and that stock, and Kathy Wood saying, oh, you need to buy it. Forget all that crap. Focus on just a handful of things that provide you with the right amount of liquidity. You've got the right amount of volatility, and dare I say, the right amount of predictability. Now, listen, I don't want FTC issues here, but we know there's nothing to predict the markets accurately 100%. But there are some securities that when they trend, they tend to continue on, and you start to see levels respected more frequently. Those are the things you want to focus on. So anyway, just sprinkling on a little extra flavor to our 5 day trading things to focus on for futures here today.
Merlin, I was in Southern California, ironically enough, and this is a long time, this is years and years ago. But this was motivational to me. And I see, this black Porsche, and it's driving down probably the 405. And I look at the plates, and the plates were NQ Trader. And
Nice.
and that hit me. And it's kind of like what you're talking about. Here's a guy, that we're guessing, has been very successful in trading the markets, but did it with one product basically, and when you find a product that, as you said, fits all the criteria with volume and spread and liquidity and an ATR and all that kind of stuff, it can be done. It can be done with really just one. And then obviously, I like to branch out a little bit more into the 6, but having, like, you said, the discipline to stay with those products only because of specific reasons and criteria, it does work, and it can be a really positive thing. I tell students in the room all the time, if the NQ and the ES aren't moving, odds are nothing else is moving, because they're either waiting for an announcement or there's something going on, because those products will move. And if they're not moving, odds are nothing's really moving. So don't waste your time going and searching all over, because for the most part, probably nothing else is really going. So yeah, I love that.
Nice. Let's go back here and ask. There's been a lot of chat, and I apologize if I haven't gotten to them right away, guys. We wanted to get to that discussion first. There was a couple through here. Marco says, how can I join Jerry's trading room? I will put it up here. You can go to PacificShoresTrading.com, and you'll see Jerry's mug right there, and you can click on there's all the information here, the contact information. You can register, sign up, see what classes he's got over here at Pacific Shores Trading. That's the easy one. And let's see, Pat fans forever. We've got wait a minute. This is a Patriots fan? Get out of here. No, I'm kidding. For the Pats fan here, he says, love to get your thoughts on using Fibonacci when day trading futures. So you got your parabolic SAR. That's kind of your big one. Does Fibonacci factor into it all for you?
You know what, Merlin? I use the Fibonacci drawing tool to identify my risk rewards. You know what? Here, do I have a quick 30 seconds to show them this?
Sure. Let me just get this. Yeah, go for it.
Yeah, let me share screen. Let me show. All right, so they should be seeing my screen now.
Well, that's your OnlyFans page. What is that? No, I'm kidding. Yes, we got it. It's good. I see.
I'm covering my PG-13 ears.
You're good. You're good to go.
Thank you. Where the heck? I'm just trying to here. I want to show these guys. So, like, for example, this is the S&P. And this is a 5-minute chart. This is the original. This is the first part of the day. This is the This is the S&P on a daily chart, meaning the .D chart. This starts at 8:30 in the morning Central Time, 6:30 Pacific. So the way I use fibs is I literally customized it so I can take my fib drawing tool and I can click on the opening range candle, and I can see it identifies for me 200% is 1-to-1, 300% is 2-to-1, 400% is 3-to-1. It gives me my risk reward off of my origin candle, or the candle at my entry candle. So that's what I use fibs for. You'll have to take that deeper, Merlin, because
it's not really fibs. I mean, to be honest, it's not using fib. He uses the fib tool to calculate out those levels, but that's not Fibonacci. Fibonacci is, your 38.2, your 70. It's different ratios in there. So I'll give my salt on that one.
Yeah, because I don't use them. Like I said, I use the tool, as you said, for the risk rewards, but I do not use them in a conventional sense. So yeah, that one's you.
Yeah, it's tricky because I think everybody, when you scroll through the indicators available on these platforms, there's hundreds, if not thousands of them. And I think everybody gravitates towards what they get comfortable with, or what they feel works for them, or what they've been sold by someone in their comments. Fibonacci is something that is, it's irrefutable in its existence throughout nature. It is really bizarre if you start to dive into Fibonacci and look at what it represents, all the different ratios in the human body, in animals, in art, in the way that we perceive things. Fibonacci is really fantastic. The question is, does it really translate over to the financial markets? And Part of me believes that it does. I do think there's some aspect to it. I use Fibonacci retracements and extensions just as a forecast tool. And if I can get those to line up with existing supplier demand zones or other levels that indicators have maybe drawn me to, then I will put much more emphasis on those areas. But I am not using Fibonacci as this is my determining factor to make this trade, and it has to go here. I don't use it for that, but I know a lot of people that do. Jeff Manson is a huge Fibonacci fan, and I have several other trader friends who are, I will say, addicted to it. And bottom line is, if Fibonacci helps you make money in the financial markets, then I would say use it. If waking up every morning and pooping in your front yard turns your trades green and you make a ton of money doing it, then poop in your front yard every damn morning. Whatever the weird things we do, I read an article about a guy, he used them, I swear to God this is true, he used the migration patterns of elephants to pick his trades, and he was successful at it. I think he got $40 million worth of funding from somebody for it. It's like, what? Are you kidding me? How does that do with anything? Honestly, I think it doesn't even have to do with the elephants. It has to do with the risk management side of things and the discipline of not taking big losses. So use whatever you want to use. I do like fibs. I think it's a phenomenon in nature, but it's not going to make my trades for me at all. All right, sorry, I went long-winded there. Here we go, long-winded again.
No, yeah. No, I'm glad you did, because like I said, yeah, no, it's not something I use either. I think it's a specialized part of the market. If you've been trained on it, and like you said, if you're seeing success with it, by all means. But there's a million things we can do, and that's just not one of the ones that I use.
What else did I have here? Oh, there was one other question. It's in here somewhere, and it was about do you use... there it is from Margaret. Do you trade overnight levels in the index future? So, we've got that window of time that the equity markets are open, the futures markets are open, much more than that. We've got from 6:30 Pacific time to 1 p.m. Pacific, let's say the S&P is open, but we get pre-market trades that happen. Are those valid to you? Do those carry any weight?
So it's ironic that you say that, Merlin, because I literally just put a course out. It's the new, it's not even on the website yet. You'd have to email me on it, but I just did a course yesterday for students, and it talked about those overnight levels. And I'm going to share my screen again, because this was the motivation for me to do this course. And I had a couple of students asking, but here, I'm gonna show this right now, just 'cause I want people to see the chart. Again, the picture's worth more than anything. So the answer is yes. Okay, and here's when you identify, and don't mind all the squiggly lines and all that stuff. But
is this the chart of schizophrenia?
Pretty much. This is the daily chart of the NASDAQ, but it's the 24-hour chart. This is not just the 6:30 to 1:15. This is the entire 23 hours that this product trades. And, this is the parabolic SAR underneath it, by the way, and then the moving average crossover, which you identified last time and mentioned that it's been bullish since November, which is a true statement. So, but what I want you to notice is when, again, I'm using these to identify my trend. First of all, look at the number of green candles versus the number of red candles. The probabilities it's super high. And then the other thing is, remember, this chart is 23 hours. So it literally starts at 3 o'clock Pacific and it goes until 2 o'clock Pacific. So what I've started doing is, and again, you've got to be very mindful of risk, but I've literally started, again, based on specific criteria, not just random, but based on specific criteria, buying in around 3 o'clock in the afternoon and selling the next day before 2, and sometimes this or this is what you get. And it's insane, some of the moves that can occur. And I was telling my students in the room this morning, I never really understood, years ago, when people would say that futures trading or futures traders are usually the most successful traders, until I understood this 23-hour concept and how these things go up. They can go up all night and you're literally making money while you're sleeping. So to answer Margaret, yes, absolutely. I do stuff, and I've started doing stuff overnight. Actually, this is the one we were talking about earlier, Merlin, which is just insane. I was actually fortunate enough to be a part of some of this. Look at this. Every single day in gold, it opened and it went up. It opened and went up. I mean, some of these are just ridiculous moves. So yes, to answer Margaret's question in a long way, like you were doing earlier, yes, absolutely. I do like using the overnight, not only levels, but times, because they can provide some really, really big movements, while we're not having to be in front of the computer.
Right. Yeah, I mean, it's interesting discussion because some people will say that there's no weight, that you shouldn't put any weight on those pre-market levels. Others will say it does. For me, if I'm looking at a level that was established, let's say at 2 o'clock in the morning Pacific time, it doesn't necessarily mean that it is strong or weak. I would look at it and evaluate it from a strength perspective, and I'd look at volume. If there's a ton of volume there and I saw an abrupt change, then I'm definitely going to keep that one in mind. But if something turned at 2 in the morning and there was really like no volume, I don't really put much weight on that. So just because something establish a level in a pre-market session or after hours doesn't necessarily mean that I have to acknowledge it or respect it. It has to prove to me that there's reasons why it turned at those levels. Anyway.
And I think you're going about it the right way, in my opinion, is that you're correlating it to the volume. Obviously the volume during the day session is much greater than overnight. So if you're seeing a reversal level, like you said, well, maybe 2 in the morning Pacific time, because otherwise it's around the London Open. But
right.
There's not a lot of significance to it, because if you put the volume bar on there, you'll see that it was made up of very small volume. So the relevance is much less.
Right. It's easy to have a big move with no volume.
Right. Absolutely. Absolutely.
All right. So anything else you got going on here? I know you talked about some classes you have. Here's the Pacific Shores trading page for you guys to go check out, and you can click on contact and find out anything you need to know about Jerry and his programs and all that good stuff. Anything else you want to add?
Yeah, just, like for Carlos, please, because I'm doing some stuff with the website. So please, my email is on there. Please email me any questions. If you want to join the room, email me, because then I've got another site that I'm using now to get students enrolled that is making a little more sense. So just, any question, anybody who wants it, I do a room from 10 to 11 every day, Central Time. I do offer one-on-one coaching sessions, specifically to futures, that are hour-long Zoom sessions. We can do them anytime, anywhere in the world. I do have course content that supplements what I do in the room. So all that stuff is available. The best thing to do is to email me. I do have an Instagram. It's Pacific Shores Trading. We can pull that up next time, but
yeah, you're so active on your Instagram, your social media stuff. Come on, man, you gotta do better.
You know what? I just found the username and password for it. I'll be getting back on it. So, but yeah, the best way to contact me is that email, that Jerry at PacificShoresTrading.com. Any questions people have, or they want to get into the room, or whatever they want, they can email me there, and I'm pretty good about getting back to people pretty quick.
Awesome. All right, man. Well, hey, I appreciate you coming on. Thank you very much. Thanks for sharing your thoughts on 5 day trading rules. Not just things to watch out for day trading. I always appreciate sharing your knowledge with my audience, and I look forward to talking to you soon, my friend.
Merlin, I love doing this with you. You're the best. Thank you to you and to everyone. I look forward to seeing you again soon.
All right, take care.
You too.
Guys, that was Jerry Baldwin of Pacific Shores Trading. Let me take my headphones off here. Oh, no more headphones. Yeah, sorry about I don't know why that one just came in the top of my head. I wanted to come up with an example that was so absurd, therefore I came up with the pooping in your front yard example. But for some people, like, what is this guy doing? I saw the attendance drop by 50% off that comment. I've seen some weird people trading weird stuff over the years. So anyway, Jerry ran through those kind of 5 pieces. Minimize and identify an identified risk. Number 2 is trade with the trend. Number 3, trade only liquid products. Number 4, let winners run. And number 5, use multiple targets. Now, of course, we could probably do 20 or 30 different things to say to pay attention to for day trading aspects. And maybe we can do shows specific on day trading down the road. But those are very high level. The first one he has on the list, which is identify risk, is probably the most important one to me. And I noticed in my experience that I took my biggest losses by throwing caution to the wind and not looking at what the risk exposure was. As I got better, it's because I specifically addressed the risks that were in front of me. And I removed things that were either too risky or I was losing money on. I always get that question from people. It's like, well, why don't you trade Apple? Why'd you stop trading Apple? Because in 2000 and 1999, I would always lose with Apple. I don't know why, so I just stopped trading it. Now, I know I could trade it well today. I just use that as kind of a memento, a cornerstone for my trading discipline, which is if you say you're not going to do something or something has hurt you, then get rid of it and move on and don't look at it ever again. Of course, I have to look at Apple because Don reminds me of it all the time. Too bad Don didn't have a little more guts. He would have wagered me something substantial. He kept trying to wager me, you have to trade Apple. No, I'm not gonna. It's like going to someone who's an AA and telling me I got to take a shot of whiskey. Not gonna happen. But my home is. You're right. In San Francisco, it's illegal to poop in your front yard, but I think most other places it's against the rules. So lucky for all of us. All right, let me run through real quick from the bottom to the top here. We talked about the likelihood of a Bitcoin pullback coming. It is definitely long overdue. If I just put the 20-period moving average, actually, this is the 50-period moving average on here, just as a reference point. I'm a big fan of elasticity of price. And you notice how far extended above that 50-period moving average we are with Bitcoin. It's definitely due for a pullback. So obviously, I don't want to see it fall because I have a lot of Bitcoin and I'm long, but it most likely will have a pullback here. I don't know exactly where to. I've had a couple people ask me about the 68,000 level. Let's hope it doesn't breach the 60, because if it does, you're probably looking right on 52,000 is the last area of real kind of sideways consolidation breakout. Other than that, we did have some negative stuff. Russell 2000, even though it still has an ascending triangle going up to the upside here, it is a down day today. 1.91% slide for the Russell as it banged its head up against that ceiling again today. Of course, most of this driven by this numbers right here. I talked about it yesterday. I actually thought we were going to go up, step up to 0.4% on our PPI. It came out at 0.6. So that is a unwelcome surge up. And someone said, was it Pepe? Pepe sent me a thing on Peter Schiff. Peter Schiff was saying, now that the commodity prices have sold off so much and already down and starting to rally back up, we're going to see inflation rise. And that's the point I've been making for tomorrow. To me, that was pretty foreseeable. And I put the emphasis on crude oil, saying it's probably the most important instrument this year to look at is crude oil. Now, of course, we could look at the 10-year, which impacts real estate, which is a bigger component of the housing market. Of course, rents being the number one piece driving inflation, and the 10-year would have an impact there. But crude oil sold off so much that it was bound to have a rebound up, and we'll look at that chart here today. Here is, I'll go back, I'm going to jump order here. There's your crude oil, and crude oil did break above these highs we established back on the 1st of March. So this is, again, I mentioned I'm bullish on crude oil. I think it's going higher. This looks pretty good from a bullish perspective. Higher highs, higher lows. You just had a breakout. And again, where's those next levels? Well, you start to look at this small level right above us, right on 82.50, and nothing really is that strong here on the daily chart of crude oil. What do we get to 89? I'll tell you what, if we get to 89, the discussion is no longer going to be about cutting rates. It might be actually raising rates, but that, of course, is to be seen down the road shortly. Let's keep going up the list here. NASDAQ, we talked about, just down 0.31%. Everything's still looking good. What's nice about this, now that I've added this moving average on for Jerry's discussion, you notice that we are staying above that 50-period moving average, although the gap is closing. So we talked about it over the past few days that it does feel like momentum is slowing down a little bit in the NASDAQ. Not that it's done. Keep your eyes on these most recent levels. If it starts to break and make some new lows, then I think you may have some short trades on your hand. But at this point, you still got to stay long, even though it's slowing down. S&P, same thing. S&P looks fantastic. Even though it was down 0.28% today, there's nothing here that looks bad at all about the S&P chart. Keep going long. All right, we had a nice little pullback here on gold. I'm a little disappointed. As you guys know, I've got a bunch of silver, and my silver options expire tomorrow. So I really want this to close below 22.50. 22.49 would be my dream number. Either that or just not above 23. I'd like to keep my bulk of my silver holdings here and just keep selling calls against it to move on to the upside. But looking good. Today was down 0.26%. That 23.35 mark, which is that peak going back into November of last year, actually early December, will probably be that next stopping point for it. So I just want tomorrow to close below 23, and I'll be fine with that one. The Dixie, remember, talk about that thing curling back up. Well, we have the hook. And now you have a little bit of a breakout here, not breakout, but at least a break up in the dollar index to 0.55%. Again, big picture-wise, it's not telling us anything. There's nothing here that's significant other than it moved up today. The 10-year, though, which was your leader today, this was the big news. And again, I think this reflects the opinions that rates may not be getting cut. 2.39% yield just today, increase in the yield just today alone. Over the past 4 days, 6.29% increase in the 10-year. We were at 4.29%, and we do have some issues right above us with this overhead supply. It's not really supply. You don't do supply with bonds, but you got about 4.35% is that next level, and then do we get back up to that 4.6 or 4.5? So all in all, have you shared your covered call rules? I have in the past when I did my 1% strategy show. That was a long time ago. I think you look up the 1% strategy. I'd like the Q to close below. No, I'm talking SLV, bud. Yeah. If the Q's close below 23 tomorrow, I mean, I don't know what would cause that. A nuclear bomb. Let's hope that doesn't happen, Don. I don't think you want that to close below 23. If we got the Qs closing below 23, that literally would be a nuclear event. That'd have to be something that would be so catastrophically bad. That would not be a good thing. I would not want to see that. All right, so I've gone through those 7 markets there. As we saw that 10-year rally up here, I had to redo a lot of my layouts here, so I apologize. I switched over my accounts, and I can do multiple screens with you. I've been using the wrong account for a long time. So let's go to my futures side, and I want to show you the gap closing here on the 10 and the 2. This is the 10 and the 1. So you had a pretty big surge up, 0.77% of that gap being closed today. You could buy us an island where, yeah. Oh, are you short right now? Yeah, I'm sure you'd love to see it. If you're short the triple Qs at 400 and change, and we open up tomorrow at 23, the question you're going to have is there even a place for you to pull your money out of? Is there a financial center still going on? Because I don't think there would be. I don't think you'd ever see something that bad unless it was catastrophic and wiped out everything out. Your island might be covered in radioactive dust, Don. All right, man, I tell you, I did not want to do these hour shows, but here we are yet again, 1 hour for today. I want to thank Jerry for coming on, a little insight into kind of what he saw as 5 keys to day trading futures markets. You can find out more at Pacific Shores Trading for Jerry. Tomorrow is a whiskey show, so I will be. It's been a good week. I've had a great trading week this week. Oh, I just mentioned I did buy some more Go EV. I know this is I've earmarked 5,000 on this one, so. This thing looks like it's just dead in the water. And honestly, guys, if you look at a lot of the EV space, right? Check out Lucid. You saw Lucid declare bankruptcy today. The Lucid Group, bam, got smacked good today, down 6.76, over 6%. Was it Lucid or was it? No, it wasn't. It was Fisker. Sorry, not Lucid. Fisker declared bankruptcy today. They were down 51%, but all of them. This is Fisker. Here's Neo, right? You got Lucid. I just brought up. I already brought up Go EV. Rivian took a big dive. I needed to close above 10 by the end of the day tomorrow, which is fine. It should be okay there. And then you look at Tesla, right? There has been downgrades for Tesla. People talking trash about Tesla. At some point, it'll probably be a great buying opportunity, but at this point right now, you got to stay short unless you're trying to catch that falling knife. Right? Lower lows, lower highs is essentially what's going on here with Tesla. Not looking great from a technical perspective, so stay short the rallies until you're proven wrong. At this point, you got to be bearish on Tesla. Although Don's probably going to tell me he's loading the boat on Tesla and he's bullish as all heck. But that trend right now is just saying stay out of it. And we've talked about that for a while in this program, that it's been below the moving averages, it's making lower lows, lower highs. Stay short on this one until it turns. Is Tesla leading other EVs to the downside? Yes, Margaret, I definitely think so. I think what's happening is people look at the weakness going on with Tesla, and it's like if Tesla is struggling, then all these other ones don't stand a chance. I think that's the general consensus out there. So I am definitely taking a gamble, and as I mentioned, I had $5,000 earmarked for that gamble trade, so I have no problem with it. It's counter trend. I'm catching that falling knife. I love the product, and I think it may get bought by someone else, but we'll see. We'll see if I'm right or if I'm wrong. All right, everybody, that's going to do it for me. If you got anything you want me to talk about for tomorrow's show, I think I saw... I actually wasn't until this week. You've been buying some long? Someone asked me in here, Merlin, what do you think of the Qs for tomorrow? Wait, how much time do I got left? Oh, I got, 30 seconds? If you look at the Qs chart, I don't feel confident that there's going to be a rally tomorrow. I feel like things are slowing down, but it's just kind of consolidating sideways. So it's really anybody's guess as to which way it's going to go. Probability for me would say you're going to start to see this thing drift low over the coming days. I just feel like there's some weakness going on. It's slowing down. You're starting to see more negative press. The inflation data this week I think was bad. I think that brings the Qs down. So if you're short, congrats, and keep riding them down. All right, that's going to do it for me, everybody. Thank you so much. I hope you enjoyed it. If you have any questions or you want something covered on the show for tomorrow, email me, TraderMerlin@gmail.com, or go to any of the YouTube videos, put your comments there, and I will get to all those and bring them on to tomorrow's show. I have already 4 questions that I gleaned from our YouTube channel for that. So I will get to all those on tomorrow's show. Thanks, everybody. Have a great day. Take care.